All right, Johnny, we are live here. So great to have you back. And for those of you joining us, introduce myself real quick. I'm Jessica Moir. I'm a realtor at Nest Realty in downtown Fredericksburg, serving our greater area. And next to me here is Johnny Boothe of Mass Mutual. And Johnny, why don't you go ahead and introduce yourself?
Yeah. So again, I'm Johnny with Mass Mutual. I work out of Mass Mutual Greater Washington's office, but I am local here in Fredericksburg. I work remotely. Um, and just kind of to give a quick summary about what we do, we basically help people with planning for retirement, college saving, life insurance, disability, and even sometimes we even help businesses with 10 or more employees who are looking for benefits to keep their employees because that's a great retention and attraction tool.
Awesome. Okay, great. Thank you. Well, I know we have some exciting topics to be talking to you guys about today. So we're going to hit a couple main ones. And then, of course, if you have questions, Johnny's contact information is right below here. So you guys can reach out to Johnny or reach out to me and I'll connect you guys to make sure that if you would like more information or more in-depth information on any of the four main topics we're going to hit, Johnny, I know would be more than happy to go into more detail. So, Johnny, I know that like our goal today is to really talk about so many people are getting life insurance, disability, 401k, like different benefits through an employer. But of course, people may or may not understand they have the opportunity to do that on their own also, which is where you come in. So talk to us a little bit about the umbrella differences between work
Sure.
provided and personally selected.
Yeah. So it's a very popular question that people ask me a lot of times, like, hey, my job provides life, my job provides disability and all that. So should I have something else on my own? Is one better than the other?
Right.
And the truth is, I tell people if you can manage it, you should have both.
Okay.
The reason, or I say, when it comes to what they call group benefits or what you
Mhm.
get at your job, those are great because, as most people who have those know, they're either free or they're pretty inexpensive for a good amount of coverage, particularly when it comes to life insurance.
Mhm.
Um, the reason for why you should consider having your own is because just think about it from this point of view. What if you decide you want to leave your job? What if you would decide one day you want to retire? And what's unfortunately a real reality lately for a lot of people in this area, what if you get laid off? Um, these are all things that you got to take into account. So that's why it helps to have something kind of in, your back pocket so that no matter who you work for, whether they do provide benefits, don't provide benefits, you know that you still have, and the common thing is always life insurance. That's the biggest one everyone thinks of. But again, as you mentioned, there's other areas too. There's life insurance, there's disability, there's retirement, and even long-term care. Those are kind of the big ones that a lot of people, often think of. And a lot of times when I say to somebody, I'd be happy to talk to you about this, they always say to me, I have it at work, I'm good. But it's good to just kind of understand what's out there.
Well, and I think that sometimes, like you mentioned, if you change jobs, I mean, I know even like as a kid in high school, I worked at from the West Coast, so Albertsons, right? I was part of a union. I had a 401k.
Mm.
And then when I left to go to college, they're like, well, what do you want to do with this? Like, you need to do something with it. We're going to pay you out or you need to roll it over. And I was like, I don't know. I'm 18. Like, what do you mean roll it over? Like, I think that even as adults, though, we get hit with those experiences where we're changing a job or we've had insurance, what one company provides, another company may not.
Mhm.
Or, there's just, it's also all term, right? So there's that too. Do you see that? I know it's hard to be like generic about this answer,
Yeah.
but do you feel like group policies provided by employers are also generally lower coverage amounts than what the average person needs?
It can vary.
Okay.
Often, what you run into, there's two things. They have kind of their base coverage, which can sometimes be maybe commonly around $50,000, which that's a good policy to have. Life insurance is relative, right? So what I mean by that is a $50,000 policy for the one person might be plenty if something happens to them and their family needs to be taken care of, but the person over here, that may not be enough. So it is kind of relative. Other plans I've seen, they use their salary as a base. So they may say your life insurance benefit is 2 times your salary, 3 times your salary, which again, then it's a matter of, well, what's your salary, and just doing the math and deciding if that's enough. Um, at the end of the day, again, since it's probably free or relatively inexpensive, that's really the upside to it. You're not having to spend a lot. The employer's spending that money on your behalf or contributing to it as a condition. Remember, your employment comes with conditions, right? And it's not just their salary that they provide to you, but it's also the benefits. And that's where, again, to your question, am I underinsured? It just depends on you. But again, take into account things can change, and you may end up going to work somewhere else, or deciding you don't want to work anymore, or can't work anymore. And that's something a lot of people, all of us, I think, forget. I had a gentleman actually say to me recently, "I'm not going to retire. I'm going to do this until the day I die." And I said, "That's great. I'm glad you like what you do so much. Unfortunately, sometimes nature decides otherwise, and we can't work anymore." And sometimes in those situations, and I've had this specific situation happen. I had a client who had worked for an employer, loved it, retired at the age of 70, but she basically hung her hat on everything they provided. The day she walked out the door, you know, all those benefits went away. So then she decided, well, I guess I need to look on my own just to have some really basic final expense benefits, is what she wanted, just enough to take care of things when her time comes. But she's 70 years old and had some health issues. And it wasn't that we couldn't insure her. And we even looked, with Mass Mutual, even with some partners of ours, to try to find her some options. And it was expensive. And that's why I encourage people, it's never going to be as affordable as it is today, right? Every day we get a little bit older, and insurance premiums go up a little bit. Healthcare costs continue to go up, so all that's factored in. So it's important to just, I always come back to this: have something in your back pocket. That's what I always tell people. If you can do it, it's a smart move to make to protect yourself and the people you care about.
Well, I know, as we've talked about before too, you have lots of different plans, and you can, really work with people to get and especially for life insurance, the, you know, monthly budget where they need it to be, because you can always add coverage, add to what you already
Mm-hmm.
have. The biggest thing is, okay, well, we never expect there to be a life issue that may prevent us from getting life insurance in the next year, 5 years, whatever. So it's one of those, like, can you really afford to wait? Can you really afford,
Right.
maybe you feel like you can't afford $20 a month or 60 a month or whatever the cost is, but can you afford the alternative? So,
Yeah.
and I know life insurance is a big one, but then there's disability also.
Mm-hmm.
And so talk to us a little bit about that. I know, like you mentioned, I feel like I've seen disability beyond that sliding scale of salary type thing. But what other options are there out there for disability that are, not
Mm-hmm.
employer provided?
Yeah. So the common disability plan with most employers is that if you become disabled, um, you would be paid at 60% of your salary. So just to kind of use round numbers to give you a real life example, if I make $100,000 a year and I become disabled and now I'm on disability getting 6%, well, now I'm right around $60,000. But what we don't remember until the paycheck comes is the IRS. So after the IRS takes their cut, well, now you're someone who yesterday made $100,000 a year, and now you're someone who's making maybe somewhere in the 40s because of the percentages and the IRS getting their cut. And that's because, your disability, like a lot of your benefits, are paid with pre-tax dollars. So what we do is we also help folks have their own disability policies to kind of supplement, in a lot of cases, because pretty much every client so far that I've written disability for has it at work. Some don't, but a lot of them have them at work, but they understand that it's only going to be a percentage of what they bring home. And if you're used to a certain income and then it gets cut in half or even more in some cases, how are you going to make that up? Not to mention, you're now disabled. That means you have a whole new crop of bills coming in. Even if you have health insurance, we know that sometimes there's out of pocket costs.
Medical. Yeah.
And depending on the length of time you're disabled, the necessities, and all that, you've got new bills that you're having to account for. And
Mhm.
so a lot of times what we're doing is we're kind of trying to not offset that the loss and try to get you at least closer to what you were already making. And again, it's within your budget, because you also have to be able to pay that bill, right? Um, but once someone becomes disabled, then of course the benefits are there. It works kind of in concert with what you have. So most disability plans have a waiting period. It can vary from anywhere from 60 days to 6 months to a year. Often you set that when you set up your benefits, but those are kind of the ranges. It's important to keep in mind because the reality is 1 in 4 people under the age of 65 will have a disability at some point, even if it's short term or long term. And the other important thing to remember where disability is concerned, there's actually two things. One, in 1 year, you can tear through 10 years of savings. The other thing is disability isn't just, I hurt my leg, I hurt my arm, I hurt my hand. Disability is
Right.
also mental, and emotional, and if you're going
Right.
to, that we've had instances where people have gone through traumatic experience in their life and just couldn't work. They emotionally just weren't in the place to do it and they needed time away. That's a disability.
Okay.
And that's actually your more common disability. It just doesn't get talked about very much, but really a lot of disability comes from this mental and emotional stress that requires us to take some time away from work to kind of to get ourselves better, get ourselves back in the mode to be able to function and all that.
Well, absolutely. I feel like that's something overlooked and really applicable right now, especially as we're all re-entering the workforce after, 2 years of hibernation, basically.
Mhm.
And there definitely have been increases in, mental illness and just being able to, we're dealing with whole new levels of stress and not just from the hibernation, COVID, but
Mhm.
also like this a potential upcoming recession. I mean, there's just so much going
Yeah,
on. So I
just
think it's
living your
important.
life.
Yeah. So yeah, exactly. So it's important to recognize, like you said, that that disability could be coverage from multiple different ways, and the worst case time to prepare for a disaster is like when you're in the disaster. It's just
Right.
so tough. If something catastrophic enough to disable you has occurred, probably not the time you're trying to also like get benefits covered.
Mhm.
And I would assume it's also at that point a pre-existing condition in a lot of cases.
Right.
Does that apply to disability also?
It can, not necessarily a condition, but if you already are on disability, so say you become disabled, you're getting disability from your employer, at that point, then it's too late, unfortunately, for us to be able to jump in and help you because you already are disabled. So yeah, you could call it
Right.
pre-existing condition.
Yeah.
Um, versus today I become disabled,
Right.
or excuse me, today I get disability insurance to protect my income, and then in a week from now something actually happens. You got ahead of it, you got in front of it, and just unfortunately it only took a week for
Yeah.
something to happen. But a popular question we get asked too, someone says, okay, well, I'm doing this profession today and you're
Hmm.
writing me a disability policy. Well, what happens if I change jobs and the job I do is drastically different,
Right.
and it's not as high risk, or maybe I don't make as much money? Do I still
Right.
get this disability benefit? And the answer to that question is yes. Whatever you were written for the day of your application, the day it was approved, and what you're paying for, that's what you will get. So even if you change careers, even if you take if you go to, some people on their way to retirement might switch to part time before they officially retire. Even if you make those changes, the benefits you're paying for, it's still the same benefits you're going to get regardless. The only times your benefits change is if you say, "Hey, Johnny, I want to change my benefit," and then it changes accordingly, of course.
Gotcha. Okay. Well, I mean, I think that's important to know because, of course, there are so many things that can go a little awry in our world. So it's really important that we're planning appropriately for those things and planning
Hmm.
in advance. I mean, goodness, I think we can all think of at least one event in our lives or the lives of someone near us, where it's like, gosh, I wish I would have had that life insurance or that disability like in place prior, because your quality of life is being affected not only physically but financially.
Hmm.
So I know another benefit, obviously, it's frequently provided that I feel like especially people don't shop for is like the retirement accounts or 401k alternatives and things like that. Tell us a little bit about the Mass Mutual options for those types of things.
Yeah. So this has been a big one, especially recently, because anyone with a 401k right now has probably can tell you they've seen some losses.
Yeah,
Um, I can tell you I have. um,
absolutely.
I've met with clients and I've seen losses in anywhere from ten to $40,000 so far this year. Um, and the great thing about a 401k that your employer provides, as most of us know, you can elect up to a certain percentage that you put into the 401k. The employer will match it sometimes exactly, sometimes up to a point, but you're still getting a little extra. The downside of it, as I mentioned, is you can incur losses. And depending on how much you have in there, that loss could hurt a little more for one person than the next. Me personally, I actually heard a person say recently, well, yeah, I've lost 50,000, but I've got 300,000. And I'm like, well, I don't know about you, but I want every dollar I can get when I retire. So I wouldn't be thrilled about losing 50 or okay necessarily, with losing $50,000. I'm not suggesting anyone should panic at the same time because historically these things do bounce back. What I suggest to everybody consider is, grandma used to always say, don't put all your eggs in one basket. When you retire, it doesn't hurt, and it's actually a great idea to have multiple streams of income coming in because oftentimes what we get at retirement, is less than what we got when we were actually working. Um, and I think most of us know that you cannot live off Social Security. It's a few extra bucks, but I actually had this conversation with a family member recently. We were talking about these kind of things. And I said, if you had no other streams, would Social Security be enough? And she laughed. She goes, no, of course not. And I said, okay, exactly. Um, so what I've been doing with clients most recently is showing them different options where they're safe options, but still growth options. Because I think right now people also want that. They want the assurance that I'm not going to hand you a big chunk of the money I've worked really hard for, and you're
Right.
going to go lose it all.
Yeah,
And
exactly.
that's definitely not the direction I'm steering people right now. I'm steering people to kind of play a little more conservative,
Yeah.
with certain guarantees where I can say, hey, worst case scenario, the money you gave me today will be the same amount of money in 30 years, but also worst case scenario, it's going to grow. It just depends on how much it grows, and
Hmm.
we're able to show people different things of, using real data and say, look, if a person who had done this 10 years ago, here's where they'd be sitting today based on how the things have gone over the last 10 years.
Yeah.
If things go great in the next 10 years, here's what you can expect. If things don't go so great in the next 10 years, here's what you can expect. And all three of them actually showed numbers going upward. It's
That's
just
awesome.
maybe one has more growth than the other, but the bottom line is the numbers don't go down.
Right.
And that's the big thing. And that way you still have your 401k, you're still getting contributions from your employer. But over here on your other side, you've got another account where you put in money to it one time and then you just sit back and don't worry about it. You get a
Right.
statement, you just look at how it's grown, but you don't really worry about it until, retirement time comes and you start looking real close at it and thinking about, okay, I've got X over here, I've got X over there. How does that look for me as far as my lifestyle goes in my retirement years when I don't want to work anymore? The analogy we also use is, if you're lucky, you've got more than one pocket in your jeans, right?
Right.
So
Exactly.
in one pocket, you've got 401k, your other pocket, you've got your alternative retirement plan. Typically, it's annuities that we do,
Right.
which annuity is a broad concept. Some people say annuity and they're like, oh, yeah, an annuity. Other people say, oh, no, annuities. The important thing to understand about an
Yes.
annuity is there are different types.
Okay.
There are some where, yes, you can lose money, and there are some where you will not lose money, and they're different. And it's, yes, the analogy of high risk, high reward, that does
Right.
exist. Um, I, right now, again, knowing people are losing money, I don't really steer them towards something else they can lose money. I steer them towards something where they won't lose money while they're
Absolutely.
growing it. Another common scenario, because sometimes your employer, while you're working, won't allow you to move even just a portion of your 401k. So you might be
Right.
blocked there. But
Yep.
if you switch employers, the common thing people do, they go from one job to a new job and then they just roll the money over into a new 401k account.
Right.
It's in those situations. And again, it's where I have a lot of clients because I have a lot of clients who recently have been laid off here
Okay.
locally, where I'm saying before we rolled over, let's look at taking that old 401k and putting it here
Okay.
in this other type of account. Let it just grow there without any risk of loss. And then when you go to your new employer, start a new 401k with them. because again, a lot of these people, sometimes you might be young when this happens, and you still might have 30 years ahead of you in the workforce to build up a
Right.
whole nother retirement. But
Yeah.
even if you're not, it's always good to just always say, what else, what other option do I have? Because more often than not, you do have another option, and where you can, as they say, diversify.
I know. Gosh, when you just said 30 more years in the workforce, I was like quickly doing my own math. I'm like,
Yeah, a lot of times I do the same thing. I use myself kind of as the example when I say these things.
yeah, it's like, oh my goodness. Well, I think it's so important, like the retirement accounts and all the different elements, something that I've been communicating a lot to people about lately, especially as you know, because we've talked about it, is doing the equity reviews and trying to find out what you have in your home right now. Because again, it's just like for me, I look at your house as a part of your overall investment strategy, which is why I love having these conversations with you because it's like you can't put everything in real estate, you can't put everything in 401k. Like there needs to be diversification, right? Like this whole you have to have a plan. And I I think that's so challenging and overwhelming for people. Like I know for me, I'm the kind of person who sometimes if something feels like too big, and I feel like a lot of people are like this, if it feels too big, we kind of shut down.
Hmm.
And, I think it's awesome that, you have so many things under your umbrella. And sure, it's not an exhaustive list of every single type of wealth building strategy, but you are able to check so many of those boxes.
Yeah.
And, you've never lost money until you take it out when something is low.
Mm.
And so, your house isn't losing money right now. Your stocks haven't technically lost money until, unless you're pulling it out right now when it's low, so there's that like that tangible element. And like I know I was just having this conversation with my mom. If she sees this, she'll kill me. But she's like, I think I'm gonna get a home equity loan. And I was like, why? You need to be getting a line of credit. So it's sitting there as a safety net for whatever you need,
Sure.
but you're not paying on it until you're drawing. And then it's there's all kinds of stuff about that. But
Mhm.
even taking some of that equity and putting it into these other things that we're talking about today and diversifying, especially if you're planning on being in your home like a longer time frame, I think it's so important to talk about these options because people get overwhelmed
Oh
and
yeah,
shut down. And it's
yeah,
nice to know that, that you have people like you who can help look at the overall financial picture and their goals and go, okay, well, if this is your financial picture now and here's where you want it to be, here's the steps that we need to put in place to get you from A to Z.
yeah.
So,
Yeah, and
um,
that's very common. Is that I talked to a client yesterday, and she said she'd made a job change, and there was complete difference in like one job had benefits, the other one doesn't.
right.
She had been fortunate that in her entire working life, she was always in a situation where she just went in, they had great benefits, she didn't really have to do much. But
Yeah.
now that's changing, and this is the first time. And she felt like I've been working for years, and I knew nothing about this stuff, and she felt kind of like she was kind of down on herself about it. And I told her,
Oh,
look,
absolutely.
most people are in your shoes, which is kind of a
Yes.
good thing. Like most people haven't had to kind of try to figure this stuff out when they're young. They've kind of
Yes.
fallen into situations. I was like, but don't ever feel bad about that because you're not the minority here. You're the majority, and it can for anyone, even if they've been doing this stuff, as you said, big picture stuff can be daunting at times, and that's why
Yeah.
I like being able to help people kind of do the problem solving, and I kind of say, okay, let's just look at it
Yeah.
one thing at a time, and
Yep.
just focus on this element right now and talk about that. Okay, we got it figured out. Let's move on to the next one, and that doesn't always happen in one meeting. That can take a lot of time, and that's okay.
Absolutely. And I think that's the other piece that we as people, so if, you guys listening are even a little bit like me, like we want instant gratification sometimes. Like, okay, I have this money, I want to invest it and be like, wow. And that's not what like any of these things we're talking about. These are long, you have to have that 10,000-foot view of what do the next 20 or 30 years of your life look like, or shorter or longer, depending on your
Mhm.
age span. But you have to be able to step back and go, okay, here's where I'm at. Again, here's where I want to be. How do I get there? And it's not just like we get to go like la 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 and like get there. We have to
Mhm.
put an action and a plan in place and then follow through on it. And I agree. Like, I mean, I'd always had insurance through either my parents or an employer or my spouse. And this is the first time, I'm just south of 40. First time I'm having to get my own insurance because as a realtor,
Mhm.
I don't have employer provided insurance. So I'm like, oh my goodness, the market, like I didn't even know where to start. I'm like, the marketplace, like, is that a thing still? I just had never had to even pay
Yeah,
attention. And even for those of us who have had had these things provided to us, I feel like we just check the box. Yep, work gives me health insurance. Check. Disability, check. Like, we don't even sit down and ask questions, or a lot of people don't even dive into, well, what are my coverages? What are the asterisks? Like, where's the
mhm,
fine print of
absolutely.
I got to be employed for X amount of time or have to work a certain amount of hour? Like, there's always, I hate to say a catch, but we need to be mindful and be good consumers of the products that we're being provided. Um,
Yeah, and
and I
that's
think
that's that's an excellent point because one thing I try to do is when I speak with folks and they have questions, I try to, because some questions are frequent that every single person will ask you, and then every now and then you get someone ask you a question you've never been asked before, which is great because you learn too, right?
yeah,
But I try really hard to be as transparent as possible. Say, okay, understand there's a waiting period. There's this, there's that. There are things that may not qualify for this.
yeah,
Like everything, there's rules, but I found you know that transparency. I want that when someone talks to
yeah,
me. So I try to pass that on to clients and try to make sure that I cover as much. And sometimes it actually might work against me because I might be trying so hard to be transparent that maybe I tell them too much and like I
yeah.
overwhelm them with information. So but that's one thing I
No,
just want people to know. When you're spending money on it, you work hard for your money. You want to know that I work hard for my money. I want it to return the favor.
right.
I want it to take care of me and take care of my family. I want to know that when I'm spending my hard earned money on month to month or every year is something that is going to be, useful to me if and when I need it,
Right.
not just something with a fancy name.
Absolutely. I think it's an area where we just don't, we put our heads in the sand a little bit because it's scary, and or fear takes over when we're talking about life insurance, disability, retirement. This means we're either old or broken. And I feel
Mhm.
like those are two things that we don't honor in our society. And so we're like, well, that's never going to happen to me. So let me just put that on a shelf. I'll deal with that later. And
Yeah,
I mean,
they're not
there's,
they're not fun things to discuss, but they're things that unfortunately we have to face. And I think it, it's it's the moments when we see it happen to others too
yes.
that those sometimes can be eye-opening moments, whether there's somebody that's close to us or not. Those are
Yeah.
those moments where we have to consider the fact that the tables could turn, and one day I could be the one in the hospital. I could be the one needing care. I could be the one going through something traumatic and needing a break from the rest of the world to
Yeah.
still be able to pay my bills. Because
Right.
unfortunately,
That's so
Verizon
long.
doesn't care what's going on in my life. They just care that they get paid every month, so I can still have the internet,
Exactly.
still have a cell phone. So
Well, and I think that's a great segue into your the fourth thing I know we wanted to cover. Like, I
mm,
have a client right now who thankfully has a cousin who's assisting. We're selling her home, and she's moving to be closer to family, like in a 55 and older type community. But one of,
mm,
I forget the exact term right now. I think there's like a much more like, nicer, cooler term, but basically like an assisted living where you can
mm,
start off in a condo and you work your way down to whatever level of care you need, like a progressive living or something.
yeah,
But
yeah,
so I know long term care insurance is something that you also are able to help with. Can you tell us a little bit about that? Like, I don't know
yeah,
that everyone knows that's even a thing.
yeah. So I'll use myself as an example. Both my grandmothers have passed away. Um, both of them at the tail end of their lives, though, were not in a position to take care of themselves. They needed assistance, whether it was hospice, whether it was being in a facility, a 24-hour kind of care facility to help them. That's kind of what long-term care is. Or it could be as simple as someone comes to your house. It can be you being in a facility, things like that. The reality is, and again, I'm using myself as an example, but I don't think I'm unusual. And if anyone watching this thinks about their parents or their grandparents who may have passed, or maybe right now or in later part of their lives, there's a chance that a good number of those people did need some kind of assistance. Oftentimes, assistance could even be if you can't do things like feed yourself anymore, if you can't dress yourself, can't get yourself out of bed, those kind of things. Um, it can be brought, but what long-term care does is provides basically benefits, basically insurance to pay for those costs, because the truth is it's not cheap, and it's
Okay.
probably not going to get any cheaper. Especially people in our age group in about 40 years from now, it's gonna be more than it is today. Um,
Absolutely.
you'd like to think that maybe technology be a little better too, so maybe we'll offset it. But something we do because we understand too. Sometimes people say, "Well, long-term care. Well, what if I never need long-term care and I'm pouring all this money into it, right?" Um,
Right.
and so we recognize that. And so it's not just long-term care; it's actually bundled with life insurance.
Okay.
So the way it works is you're getting this policy with the preparation that I might need long-term care. But what if you pass away suddenly or unexpectedly? You never need the long-term care. Well, then that
Right.
policy still acts as a life insurance policy for you too.
Okay.
That way, your money hasn't just been basically thrown away. More,
Disappearing. Yeah.
that's how a lot of people might look at it.
Oh, absolutely.
But another way to look at it too is to think about this. I have very clear memories of the time before my grandmother's passed,
Hmm.
and I don't know that I don't really prefer to think of those memories. I prefer to think of before that the good times I had with them growing up and
Hmm.
holidays and birthdays and things like that. But I
Yeah.
do remember those moments.
Right.
And I know a lot of us would not like to remember our loved ones mostly in those moments. And I know a lot of parents and grandparents
Absolutely.
would not want their children and grandchildren that's how you remember me. You remember me in a bed. You remember me, in this state. And so, what long-term care can also do is it helps a family not have to be the caregiver, but to
Right.
manage the care,
Yes.
which quite frankly is what they're probably more qualified to do, because most injuries for people who are in need of long-term care come when they're in the care of a family member, because while the family member means well and cares about them and loves them, they may not be qualified to provide the care they need, and inadvertently could make things worse for their family member, which
Absolutely.
and that also can result in more of a financial strain now, right?
Yep.
So that's kind of the nice thing about it. And again, you and I were commenting before in a conversation we had, seeing this, if we think about our own lives, we think about our
Yeah.
family, parents, grandparents, or even people we know. I think most people can think of someone they've cared about or someone they know of,
Yes.
who has been in this boat. And again, people might say, well, I'm going to self-insure myself because maybe they saved a lot of money. That's a great plan, but we can, and I really appreciate that. And I envy that actually, that you're in that position to do that. What we want to do is show you how to make the most of that money so you don't necessarily spend extra money, or any of it's done in vain. But also, again, just think about it from the standpoint of quality of life and where other income might be coming from, specifically long-term care, because, unfortunately, Medicare isn't really going to provide a lot of that. Medicaid, which is more of, for people who are low income and not necessarily over the age of 65, um, may help, but we have to be honest and too and say we know they're not going to dish out all the money in the world for it. You may not get the best benefits from it. So this is why it's good to have it again, put it in your
Yeah.
bank.
Well, and I think if there's people listening and they haven't had experience, they haven't had a loved one yet enter, there may not be an understanding of just how expensive those assisted care and progressive like living
Mhm.
centers are. Like I remember both of my grandparents were in where they started off like a two-bedroom condo with no check-in and were progressed as they aged. And I just remember, I don't remember the number, and this was actually years ago, so I can only imagine now. But when they were in the condos, it's like 4 or 5 thousand a month. I mean, it's just really intensively expensive. And at that
Yeah.
point, they don't have a house payment, so that there's a lot of things that balance out. But still, I can only imagine, like for me being just south of 40, like okay, well, by the time I'm ready for something that is more progressive in 30 or 40 years or whatever the case may be, I can only imagine what the costs are going to be. I
Yeah.
mean, as we all sit here waiting to see what the Fed's going to raise the rate again today, you know, I mean, it's just, I feel like that's um, a real opportunity for us to all wake up a little bit and
Mhm.
be planning in advance because you're right, there's only so many programs that are going to assist us. And yeah, maybe it's, you know, X amount of dollars a month now, but I think you make an excellent point where it's like, as a family member, you know, and like I'm one of two kids. There's myself and my brother. Like one or both of us are going to be eventually probably helping our parents and managing their finances, their living, whatever the case may be in, you know, the 15, 10 year future. And you know, there's also the distance thing. Like I
Mhm.
can definitely help manage expenses and help manage things, but they're on the other coast. You know, I can't be there in person unless there's major relocation happening one way or the other, which may not be in anyone's best interest either. So it
Right.
really helps bridge that gap of, you know, potential geographic distances of being able to say, okay, well, even though I can't be there as much as I want to be in person, at least I have like we have the means in place to make sure that the care is there and you know being provided for and um, it's quality not quantity, right?
Mhm.
Especially when it comes to our health. Like that's I think that's a really huge importance. Like yeah, could I just have employer coverage or no coverage and that'll be cheaper for today? Sure,
Mhm.
but, you know, again, that 10,000-foot view of what's going on and where our future plan A to Z. And so these four items that you've been discussing are just, yeah, hugely important. So I really appreciate, and I know like for those of you who've been either sticking with us or joining us fresh, this was a ton of information. And I know it's like we already discussed, easy to be like, well, that was a lot of information, like click exit
Yes.
and then set it aside. But reach out to Johnny, reach out to me, and I can connect you with Johnny. You know, so whether you're looking at life insurance, disability, retirement accounts, or long term care, you know, there's a lot of opportunity. Just pick one of those to start. You know, make it small and manageable, and then you can edit. And I know, Johnny, I'm sure they can call you and you'd be happy to
Mhm.
look at the overall portfolio and go, we need to start here or, you know,
Yeah,
wherever.
definitely.
So,
And that's
um,
usually the case. Usually we kind of say, a lot of clients will say to me, well, I'm concerned about, they'll say three things. I'll say, okay, well, is there one that's the more concerning to you than the other? And they'll say, oh, and
yeah.
they know. And they say, yeah, it's this. I say, okay, then let's just focus on
Yeah.
that right now. And then we'll get
Yeah.
to the other stuff. And that I think helps make it less daunting.
Yep. Just small, manageable goals. You know, have the stretch goal be I'm going to get my plan to wealth in place, but have like the monthly or quarterly goal be much smaller,
Yeah.
right?
And I, the other thing I always tell people, and they always kind of laugh, but afterwards they realize that I'm being serious with them. I say, sometimes I think people want you to think this is more complicated than it really is. It
Mm-hmm.
doesn't have to be complicated.
Mm-hmm.
And I try really hard, and I'm that type of person myself. Again, right? I need
Yeah.
you to kind of keep it simple, just get to the point.
Yeah.
Until I have a weird question, then I'll ask it. But for the most part, I need like bottom line
Yep.
XYZ. Tell me, how we go about this, what's required of you, what's required of me. And
Yeah.
so I try to do that and try to keep it as simple as possible because, again, I know I'm that kind of person, and I think
Right.
I'm not the only one.
Oh, absolutely. Absolutely. Well, I appreciate you joining me today and going through all of these different options. And again, Johnny's information is clearly on the screen here. So make sure, you know, call, text, email, whatever questions you might have. And, you know, I didn't talk a ton of real estate today, but if you have more questions on the equity and pulling that equity out in a HELOC or things like that, in order to do investments, to build that plan of wealth, make sure you reach out to me also. Would love to talk to you about that. That's a complimentary consultation. I just loved like Johnny and I work so well together, so we both really love to provide education and guidance and just, you know, making sure that everybody is getting the best care because we don't know what we don't know, which means like we can't even start asking questions because we don't know we should be asking the questions. And so I know I always appreciate when I'm on a webinar and I'm like, ooh, like that was a nugget. Let me write that down and look into that because I would have never thought to ask that or whatever. So, make sure to connect with us. But we will have Johnny back in the future. And Johnny, maybe next time we can tackle, I would love to help educate everybody here on, how to shop for these things too, how to be comparing and what to be looking for. I think
Mhm.
that's the other step of the overwhelming process is
Yeah,
like, okay, well, now there's like endless comparisons and how do I do that? So
sure.
that would be great. But all right, Johnny, well, great. Well, thanks so much again. And we'll talk to you soon. I hope you have a good rest of your day.
You too. Thank you. Thanks, everybody.
Thanks.